Oh,
Hello, everybody, and welcome to today's episode of Trade the Chain. Thank you for joining us. Sorry we missed yesterday. Everything has been completely crazy and busy. But look, we brought Rob. It's
hey.
like a piecemeal here, so everybody would be okay. We'll watch. And of course, we got CJ, our crypto analyst from marketrebellion.com. But happy Wednesday, folks. It's November, so September 15th here. So, as the title says, one is we're feeling bullish. There's nothing negative about the markets right now. A lot of the markets, just for a snapshot, in the green over the 24-hour period going on. But before we get in with CJ, who is going to break down the charts, as well as maybe give some insights. I know the guys over there have been looking into a couple of different individual coins. If you remember Market Rebellion, definitely know they dropped a little piece on Chainlink this morning. And then, of course, Rob. Rob is the angry little guy from Texas, really upset at the SEC. We'll dive into that. We'll talk about what's going on with pay for order flow, as well as some other stuff that Gensler is talking about over his testimony. But before we do, as always, just a reminder, nothing that Digital Asset News, Market Rebellion, CJ, Trade the Chain, Rob, Alex, any of us say is to be considered as financial advice. We're just here to educate you guys and entertain. And feel free, as always, to hit the chats with some questions for us. If you have them, we'll pick appropriate ones as we see them. So, Rob, how's it going?
Fantastic. It's going good for me. It's not going as good for some people in the SEC as Gary Gensler tried to answer all these questions from the Senate hearing committee. And it was just, people say like, let me give you an answer on that. And they go around like 3 or 4 times. You're like, did you give me an answer? That's essentially what it was for like 2 hours straight. And other than that, I mean, everything's good. Sentiment looks pretty good. And I'm just excited to hear what CJ's got to say for the technicals to give us some more hopefully good news, because damn it, September, I think is going to kind of suck.
What really sucks right now is Monte. He's at the dentist getting drills in his teeth. So luckily we're not him, but CJ, if you could, let's start off with the big boards, my friend.
Sure.
Thank you. Will do. And Rob mentions technicals, but I would be remiss not to mention some fundamentals as well and some on-chain data, because I think that, it's better to create a holistic picture and, as opposed to just look at straight technicals. Being said, I think the technicals do look very favorable. And we did publish something on Bitcoin earlier this morning as well. If you'd like to see that, you can check out marketrebellion.com/crypto. You can try it for just $1. But after I finish that shameless plug real quick, let's get into the Bitcoin technicals. So first interesting pattern that we have is our symmetrical triangle. And the way in technical analysis that we interpret symmetrical triangles is that they are typically continuation patterns from the direction in which the breakout occurs. So therefore, in this case, you would have a symmetrical triangle breaking to the upside and a potential retest of this bullish level at approximately 50K. So I think we're in the midst of getting a reaction rally to the 50K level. And at that point, if we are to go there, then I'll have to reevaluate the trend a little bit more, because I do think we could go into a little bit of reaccumulation here. However, we already have seen really nice supply absorption, and you can see that's pretty indicative by the wicks. And I'll get more into that in terms of supply absorption when we talk about the Bitcoin on-chain data. But also, in addition, what we have in terms of technicals, we have the CCI turning up. And so this is what is known in technical analysis as divergence. It's when you have price doing one thing, and then you have a major oscillator, such as the MACD or the RSI, or in this case, the CCI, doing the opposite of what price is doing. That typically leads to a reversal in the direction of the CCI. In that case, that would be a continuation up to that 50K level. In addition, we see a diminishing returns diminishing returns in terms of the decreasing momentum in the MACD. We're actually starting to turn up and hint at a potential bullish crossover in these coming weeks, or coming days, I should say. And then finally, the last metric that I will explore today in terms of technical analysis, because there are quite a lot of them that are giving bullish indications. But I think the thing that's interesting is that when you look at these moving averages, specifically the Williams alligator, we had a consistent parallel trend. When there's a pretty parallel distance between these bands, that means we're in a trending market. However, we had a change of behavior when we experienced this mass liquidation just last week. However, ever since then, we are beginning to turn up. And I think we have a possibility of starting a new uptrend, if we get into a consolidation like this, something like this, and then push up even higher. So I think the technicals are showing us some really bullish indications going here for a test of 50K. Now, last thing I want to bring to light is percent balance on exchanges. And that has hit a new low that we have not seen since February of 2018. So, how do we interpret this type of on-chain data? Well, the way in which I see it is that you have a decreasing amount of supply, let me start and rephrase like this. You have an increasing instance of supply as price comes down. And so therefore larger entities are distributing into that top end of the bull market and are eventually, getting out as more Bitcoin comes onto exchanges. Then we are followed up by a period of accumulation, but the balance on exchanges doesn't really increase. It kind of remains stable. So what I interpret this to be is larger investors who are accumulating, but perhaps they're only dipping their toe in the water because they're still leaving their Bitcoin on exchanges in case they have to sell it in the short term. However, what I want to draw you guys' attention to is look at this very sharp decline in the amount of Bitcoins on exchanges. And that corresponded with a increase in price. And what I interpret that as investor intent is bullish. Investor intent believes that this was a bottom and that we have further movement to the upside. Because if investors didn't think that, they would still keep Bitcoin balances on exchanges. But we're seeing the opposite. We're seeing a further decrease as price kind of continues up. So a long-winded explanation, but I think that the technicals and the fundamentals are leading us to a potential retest of 50K.
Okay, well there it is. Quick note though, with do you feel that the institutions that are dipping their toes in and doing the small accumulation are detrimental to the market right now, or where are we going? Because everybody always talks about supply shock, which is
supply shock.
Supply shock.
It's a very valid concept, and I think that supply and demand within the cryptocurrency market is the number one driver of price. I mean, that is entirely what the stock to flow model is based on, is decreasing and a halving of supply. So I don't see it as being detrimental. I think it actually sets a floor for price, perhaps. That 42K level seems extraordinarily strong right now. I think if there's anything that could be detrimental in terms of like short-term moves, it's leverage and these mass liquidations that really move price either to the upside or to the downside, which, to be honest, like I'm all for. If people can buy lottery tickets, then they should be able to use 100x leverage, because 100x leverage is a lot better odds than the lottery. But
yeah, I mean, I agree with you, and there's a use case for leverage in the traditional markets as well as crypto. I just don't like it when I see people who don't know how to properly deploy the instrument get blown out of the water. But that being said, and folks, just real quickly, what CJ was alluding to with as far as diminishing supply and value increasing, that's why a lot of people look for coins to burn. So when there's a transaction, the coin burns. It's an inflationary device on the smart contract, and it keeps reducing the amount in the hopes that scarcity will support price and to the upside. So if you're new to the space and you come in, you see burning coins, that's what it's about, supply. So that was cue to you, Rob.
I know. I was just waiting for you to go, Rob, what do you think? Because like you always do. I'm like, all right, that's good enough. So, well, there's a couple of things. First of all, so when CJ says, hey, you know what, leverage trading and 100x and whatever else, and then you appropriately came in and said, yes, when people know what the hell they're doing, but there's so few that actually know what the hell they're doing. And that is the problem. And like I was listening to the Senate hearing, and they were talking about how many people have actually gotten into the market because of accessibility and because of just the opening of technology. And he talked about how like in the 90s, it was like, for every household, it was like in an American household, it was like 20%. And then 10 years later, it was 30%. And now exposure to the market is, first of all, you don't have to pay anything because you can go through Robinhood, even though they screw you in the those order books and things like that. And so there's an uptick of people access to actually getting into traditional finance and now cryptocurrency. The problem is that there's more people that have access to leverage trading. Like, well, if I can get rich in 4 years, in 3 years, in 2 years in crypto, why don't I just get rich in 2 weeks when I just do leverage trading? Because this guy told me I could do it, and I trust that guy because that guy wouldn't lie to me. Well, here's the thing. Those people lie to you all the time. And all those different like leverage traders and all that, if you don't know what you're doing, stop. Or go to Market Rebellion and learn how to do that stuff. I am not saying that. So that's the first thing. The second thing is, it's really just a question, which is, do you think that this narrative that everybody's been touting, myself included, that Q4 is going to be a big time frame as far as cryptocurrency digital assets, and that may be why people are dipping their toes into it to see if it'll actually go up in that time, October, first week of October, second week of October. And then if we do get that, then maybe it'll lead to that, hopefully like more of a hockey stick parabolic move, November, December, maybe January. Is that what it is? Or is there like some great fundamentals I have no idea about?
My personal opinion is I think Q4 is the quarter to watch, but there's, as far as, and we've spoken about it on the show many times, unless CJ has changed his mind last week, him, Monte, and myself, we're looking at the market to rise through the end of the year and slightly into the first quarter. The problem is that, we're also telling people, and this is why CJ covers the S&P so much, about the traditional markets, and to look for those warning signs that may affect crypto. And one big warning sign that came out this morning was actually one of China's largest housing developers. And of course, nobody will pick up on this. Why would you read about China's, housing market or anything like that during your morning bagel? But their largest housing developer is about to default on billions of dollars in loans. And why does this matter? Because this is one of those warning signs that becomes a systemic ripple through the economy and will drive it down. And if everybody remembers back in 2008, same thing happened. What you need to look out for is, one, always the housing market, which then ripples through to various other sectors, including consumer goods, which then affects consumer confidence index. So that's happening in China. That's days away from billions of dollars in default. Now, the thing that I'm going to be looking at is watching when that default happens, how that ripples through their lending system at their state-owned banks, and if it's going to go cross-border, because then that might change my mind on where I see crypto going over the next 6 months.
Yeah, and I think on top of that, people will say, well, who cares, about what happens in China? But everything ripples out across the globe, and not to mention the fact that as far as like Asian investors, that is a huge component of the crypto market. So you have to take a look at that. I saw that there was 10 or 11 high rises that were demolished because there was no investor interest. They were just demolished just to make room for something else. And the third thing I saw was that another developer in China was going to tokenize or put one of the assets on the blockchain. So it was like 3 different things. And I thought to myself, that's a pretty good idea, because in traditional markets, if you're trying to find like a buyer for a large, huge investment property, it's you are very limited. But if you can tokenize that, and instead of going to 1, 2, or a group, You go to a majority people and say, hey, here's this building. We're going to tokenize it and you can buy into it. Now you can get 100, 200. I mean, it really, it's infinity. And I think that's a big play if they pull it off the right way. My 2 cents.
CJ, we didn't let you discuss this.
Yeah, it's very difficult because if you look at like 2006 and 2008, we saw very large systemic problems occurring in 2006 and 2007, but it wasn't until 2008 where we actually saw that impact the markets. So it's a difficult question to answer when you ask, when did the housing crisis start? Was it 2006? Was it 2007? Was it 2008? So I am bearish on the S&P, not currently, not in the short term, but in the longer term throughout the next few months. I think that we need to see a correction of at least 10 to 15%. But to be honest, I think that the way it looks now, I think it's got some runway, and hopefully it'll be enough runway for Bitcoin and crypto to finish the stock to flow model. But in terms of technicals and what we're seeing in the short term, I do want to speak about the S&P today because it may be a trigger to enter into a long trade. And I'll show you what I mean by that.
All righty.
So here we have the S&P 500, SPX. And what I want to draw your attention to is the 20 smooth moving average. This is also, it lines up with the bottom moving average of the Williams alligator as well. Nonetheless, each time we get a bullish engulfing candle off of that 20 smooth moving average, typically we rally to new all-time highs. This has been a very consistent pattern. It works until it doesn't, of course. But, we still have consistent strength in the CCI when we test these upper levels. And now we're actually creating a higher low, and we are turning up in the S&P 500. So to zoom in here a little bit closer, you can see that we're getting that bullish engulfing candle off of the 20 smooth moving average. And so that's enough for me to enter like some longer term options positions to ride that potentially to new all-time highs. In last few weeks ago in an episode of Trade the Chain, we said the same thing on this spinning top candle, at the bottom of a downtrend. We said these two candles, both of them are very good entry triggers for a potential return to new all-time highs. So I think we're seeing something very similar, and I think this bodes well for bullish price action. But, to Alex's point, and to, if we are to think about a potential black swan event, this is quite the trend. This is quite the parabolic run. And so it wouldn't be a complete shock if we broke down from this level and retested 4,000. So while I am looking to enter a bullish position at the close today, I think it's important to have a tight stop loss slightly below this moving average in case we do experience a large breakdown. So yeah, that's my view on the S&P in the short term. And just to be clear, we don't advocate any leverage trading at Market Rebellion. It's primarily options trading, if anything. We actually worked with this one team before we were creating the hedge fund that they were trading on BitMEX with like this AI program that used about 3x leverage, and it did really well for a while. But the problem with that leverage is that the downside is just so great. You can have 10 trades in a row that are great, but it can get wiped all away with just a little bit of leverage.
Kind of like Alex at the craps table.
Well, that's essentially what it is, Alex. I mean, we're just playing craps in that situation. So yeah, if there was a soundbite I'm going to take from this show, that is the soundbite I'm going to put on my channel. You can do 10 great trades and one trade just to. So that is how it is.
And just so everybody knows, speaking of gambling and Alex losing money at the craps table, this monumentous event that's coming up in Las Vegas in a week and a half.
Yeah.
Once again, we got a bigger decal that Dan teaches crypto. will be running on the car at Las Vegas.
Oh my God.
Much, much bigger. And that way we can have the Market Rebels, we can have Trade the Chain, we can have Voyager, we can have Cent, we'll have Rob. It'll be awesome.
It would be awesome. I'm sorry. I was going to be I'd love to go to Vegas. I have family still in Vegas. I have friends still in Vegas when I live there. And I'm just, because of the move to Puerto Rico, I just can't go back and forth. I'm sorry. I can't make it out there.
Rob's scared.
I am scared. Well, last time I went rolling with Alex, actually the last time I went with Alex, we won a couple $100 in like 10 minutes on the craps table. Alex gave my wife like, here's $100. Here's how you play craps. And then she won like $100 in like 10 minutes. She's like, this is great. And I'm like, all right, let's get out of here. She's like, no, I can win some more. I'm like, no, don't listen, Alex.
Just reeling them in.
Yeah, exactly. So all good points. I was going to see if we could talk about that before I forget the Solana incident that was going on with the 400,000 TPS. Not the tweet. Do you want to show the tweet?
I won't listen. You do your say. You have the floor now, and then maybe if I'm feeling like showing the tweet, I will. But I don't want to burst on your parade because listen, I know you're a big Cardano guy. I know you like Solana.
I do.
So yeah. So you go ahead. Go with the story.
So get that tweet ready because it is pretty funny. So just let me share my screen right quick. Oops, that's not what I want to do. Let me pull this out of the way. So I want to show this tweet real quick. I think this is it. Yeah. Alex, add that in for me, would you please? So if you're not familiar with what's going on, about a day ago, 23 hours or so, Solana came out with a tweet and they said, hey, look, here's the problem. Solana encountered an increase in transaction load at 400,000 transactions per second. These flood the transactions queue, lack of prioritizing network critical messaging caused the network to start forking. And it said this forking led to excessive memory consumption, causing some nodes to go offline. Engineers across the ecosystem attempt to destabilize the network but were unsuccessful. The validator community elected to coordinate a restart of the network. The community is preparing new release instructional posts on Discord, blah, blah, blah. But then I want to show you real quick, and I'll get to the whole thing about this, is that just 13 hours ago, it said the Solana validator community successfully completed a restart of mainnet beta after an upgrade to 1. Blah, 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 whatever. And supporting system will recover the next several hours, at which point full functionality should be started. So there's a couple of things to unpack that I thought was quite interesting. Let me, Alex, you can bring that back just to us. So first of all, I thought it was amazing that Solana could do 400,000 transactions. Well, let's just say they could do 300,000. And then they started to get unstable at 350, and then the whole thing broke down at 400. That's amazing because Visa does roughly 1,700 transactions per second. So I was like, are you telling me that a blockchain in its infancy, 1 or 2 years old, is able to handle that much? That's amazing. So that was what I was bullish on. But some people had a pretty good point. They're like, you're telling me, well, first of all, there's a good tweet there, but they said, you're telling me that a bunch of developers can get shut down the entire network and just do whatever they want to and then restart everything? Isn't that not the point of decentralization? I was like, no, it's a pretty good point. And then there was this really funny tweet, which Alex, you got to show this tweet now. You got to show it. It's hilarious.
I couldn't even find it from Mike Dudas, who is the founder of The Block. I'm sure everybody reads articles from The Block. I was just on my Twitter account. I don't know, maybe he blocked me or something in the last hour. But the tweet goes like this. So after the Solana news came out, Mike tweets, Solana down 14% after not working for half a day. Cardano valued at 76 billion after not working ever. I'm sorry, guys.
That's pretty funny. Now that's pretty good. That's a pretty good one. A tip of the hat for that one. So before I go on, I will just say, well, first of all, two things. Buy the dip, sell the tip. Hey, DJ. He says, does $5 get DJ crypto on the car? $5. Maybe on a raffle. Who knows? And then the second thing is I just want to see what you guys thought about this. First of all, the meteoric rise of Solana. And then second of all, these two issues that came about, first the TPS, and second the how they were able to just reset everything. Like that almost sounds like, and it's not like Ethereum Classic, but it's if we're talking about decentralization and things that just should move forward without any hand in it, it kind of goes in that type of vein.
I wish we had Lucas on the show right now. CJ, what are your thoughts?
So, one thing that I think is important to realize about blockchain technology, and this will likely change as technology develops, but right now there are a lot of trade-offs between various blockchains.
Yeah.
If you want to be fast, it's going to require more centralization.
Yep.
And if you want more security, it's going to require more decentralization. There we go. Lucas shares the fact that 400K transactions per second.
They DDoS themselves.
Yeah.
Lucas is helping us from afar.
Does Lucas have a job? Does this guy work? This guy doesn't work. Lucas
He's a programming consultant, and he's amazing at what he does.
Totally.
Okay, so let me get to the point I want to make, because this is very relevant for ADA as well, and a lot of the assets that have just gone parabolic. And I want to apply the Gartner hype cycle to the recent price action that we've seen in Solana. Now, take this chart formation with a grain of salt. I'm not saying we have to retrace 90% or whatnot, but I think the concept is what's most important to grasp. And, when we have prices going up parabolic, like what we saw in ADA during the release or the anticipation to the release of those smart contracts. And same thing with ADA. A lot of people will think, price is ultimately invulnerable. But then you have, a slight consolidation, or at least minor technological failures. It doesn't even have to be real. It could even just be FUD, like what you had to kind of break down, Rob, in terms of, smart contracts and the difficulty that individuals were running into on Cardano. So when you see that a bit of negative news begin to emerge after going parabolic, it's very similar in terms of Solana and what we saw in ADA. So just to be clear, I'm still very bullish fundamentally on these projects in the long term. However, in the short term, I think there's going to be better buying opportunities. And the way in which we can locate some of these retracement targets is by using Fibonacci retracement tool. So all you have to do in order to draw these levels is you start at the peak of the uptrend in May. And this is applicable to a lot of assets in the crypto space. But you start at that peak in May on the candle body close, and then you just drag it down to the bottom. And you can start to see where some of these levels line up. And as you can see, we saw a perfect retrace to the 140 level. So I'm going to be looking to get in, or at least add to some Solana around, if we do get a retracement to about 100, or even the next time if we potentially hit 140. Very similar instances are lining up in ADA as well. And, you can see the CCI still bearish, but little nuggets of knowledge.
I remember when Rob had to fight all that FUD after Tomato Coin, shot up.
Proof of sauce, POS.
Totally, POS, proof of sauce. I do also want to say that it is September 15th. We did have a winner for the NASCAR VIP experience coming up on the 25th. And I was like, we're going to announce the winner. It's hard to announce the winner because the email is a corporate email. And I didn't want to say the person's name. So I'm just going to email that person and let them know they're the winner, but there is a winner. I don't know how else to do it without breaking privacy.
Yeah. It's Monte at onlyfans.com.
That's a low blow. He's in a dentist chair right now. Come on, Rob.
I love Monte. I like Monte and CJ when they're on the Crypto Byte show and everything's crashing. And they're like, if we just look at these levels right here, and nice little happy clouds, and everything's okay. And I'm like, God damn, I can't believe these guys are so calm when it's going down. It gives me the energy to go to my channel and not go crazy.
All good stuff. CJ, anything to add that's happening during the week or anything else? You got any positive news? Oh, tell everybody about the members only chain link thing. So don't forget that.
Yeah, we publish news, or not news, but specifically trade insights or trade ideas of what positions Monte and I take personally, our stop losses, entries, and updates throughout the week. So yeah, we had some more updates throughout that. Why you keep laughing at me, man?
I'm reading the last like 5 comments and I can't help it.
James, soccer sucks. Your opinion sucks. That's good.
All right. Rob, anything special happening this week with you?
Yeah, I'm going to start to work a little bit more closely with Market Rebellion to help them up my trading game. And because I don't trade. So I think everybody needs to know the basics of basics. And if these guys can help teach me about that, I'm going to start to put a little bit more of that in the channel. It'll be mostly news, and there'll be like a 2-minute snippet of TA stuff down the line. And then it's just there to help everybody else. I think the big thing I want to do is really look into profit taking. It's one of the areas I totally suck at. I'm great at dollar cost averaging and telling it, but there's I have a hole in my game, as they say, and that is profit taking. So you just gotta admit your weaknesses and move on from there.
I would say that's definitely a weakness of mine that I'm continually working on. We have a bias in crypto because we hear things like, "Oh, somebody sold Bitcoin at $8," and so you get that idea in your head, like, "Oh, what if? How high could this thing really go?" But we got to come back to reality eventually.
Yeah, exactly.
All right. Okay. There we go. Happy Wednesday, folks. Everybody, thank you so much for joining us. Hang on to your handlebars as always, and we will see you again maybe tomorrow. I don't know. It's a big travel week. We got to firm this up. So take it easy, guys.
Adios.